Warren Buffett finally bought Google stock. Today, we will look into the changes he made in his portfolio in one of his last quarters as a CEO of Berkshire Hathaway. Also, we will look into Google fundamentals to understand why he decided to buy it. So stay tuned, this will be an interesting one. Now, let's look at the news. Warren Buffett's Berkshire Hathaway revealed a new position in Alphabet, making Google their 10th largest equity holding. Berkshire disclosed a $4.3 billion stake in Alphabet at the end of the third quarter, which is a surprising move given Buffett's traditional value investing philosophy and reluctance toward high growth tech names. Buffett previously admitted that he blew it by failing to invest early in Google, even though he had insight into its advertising potential. Now, I'm going to show you an interview with Buffett from 2017 in which he comments on Google.
Well, I should have had some insight into because Geico was a heavy user very early on. So here we saw value in something at that time. I have no idea what we're paying per click now, but we were paying $10 or $11 a click for something that had no cost of goods sold, and we were going to keep doing it. I mean, we could see that. So uh, I should have had more insight into that. Now, whether Bing was going to come along or other people were going to take away the market, that's another question. Whether you had sort of a first user advantage that would prevail, and there is a lot of technology to it. So somebody could have come along with a better technological product, and I would not have had any insights into that. I certainly had insights into the benefit to the user. I think Blazer Surgeon or something like that. I think it may have sold for $60 or $70 or something of the sort. And mesothelioma. I mean, that I don't know what it brings now, but just imagine having something every time you just hit a click, the cash register rung somewhere out in California. So it was and is an extraordinary business, and it has some aspects of a natural monopoly. I mean, it's very easy for me when I go to the computer. I've worked with Google before, but I'm looking for information for the annual report. I used to have to mail away to federal agencies or go down to the public library, and now I can get it in 10 seconds. So it's it's a hugely valuable device, which the other guy pays for, the user.
If you follow my channel, you know that Google is my biggest position, and I bought a lot in the first half of the year when the stock was dropping. The purchase from Berkshire Hathaway may pump the stock price, which is not very relevant for me. At the end of the day, I'm a long term investor, and I believe the company will perform exceptionally in the next years, so this potential pump will be irrelevant in the long term. Remember, when your investment horizon is more than 10 years, the only thing that matters is how much cash the company will generate for the shareholders. Short term price movement is just noise. Let's look at how Google's fundamentals have developed in the last 10 years. Their revenue has been moving up exponentially with $102 billion in Q3 this year compared to $18 billion in Q3 10 years ago. The growth in earnings per share is even more dramatic. It moved from 29 cents to $2.9, which is a 10x increase. We can also see it is accelerating, and while the compounded annual growth is 22% for the last 10 years, it grew 39% year over year. Warren Buffett mentioned that the company has some aspects of natural monopoly, and indeed, Google search seems very close to a monopoly. Look how they integrated its AI mode and have destroyed competition in AI chatbots. But what's more important is that they also diversified their revenue streams in the last 10 years. Think of Android, Gemini, YouTube, Google Cloud. Now we start looking into way more robotics and quantum computing. They have so many catalysts and potential revenue streams that it makes it a no brainer. Again, Warren Buffett bought at all time high levels. Going back to the moves he made last quarter, The most notable change apart from Google is that he trimmed his Apple stake. I also sold my Apple position earlier this year and I bought Amazon with the money. The reason was very simple. Apple's revenue growth has decelerated in the last few years, while Amazon continues growing very fast. That was everything for today. See you in the next one.